What's up, beautiful people? This is Pope with Stock Doctor Trading, and I don't even know if this thing works. So let me tell you, I'm just sitting here with bated breath, waiting to see what's going to go on with the meeting. And so I'm like, why don't I just live stream, just see what it's like, like, what's it like? So, just a warning, I can't tell, I can't see if anyone's on. Oh, all right, top left, 0-0. Nobody's watching, don't worry, I'm just practicing. If you do not want to watch what happens with the Federal Reserve on a wonky ass live stream, I suggest you go over to some other channel and check it out, because this is my first run at it. But we got to talk. All right, so we got 8 minutes till the meeting notes come out. All right, so Jay Papa is going to talk at 2:30. And right now it is 1:52 p.m. Eastern Standard Time, and we are waiting for the news to roll in with bated breath. So I wanted to be able to live stream in a more dynamic sense, be in studio, have everything live, show you what I'm looking at. Technical difficulties, it couldn't happen. I don't even know if this mic's really that good, but here we are there again without a clue of how or when. All right, so I'm pulling up this data again. Oh, look, it looks like somebody came on. All right, warning to you, beautiful friend. It's my first live stream. You're on here. Thank you for saying hello. But this will be a wonky ass version of going over what the Fed does with the 75 basis points. You'll basically get my reaction, and not really able to see too much. So I suggest you follow along. What are the ramifications of a full percent? Dan Du, thank you for asking me. Ramifications of a full percent. Well, it goes deeper. Okay, so in terms of the stock market, we'll see an instant hit to the stock market, right? But what it actually says in a larger sense is that the Fed really is acknowledging that they have lost control, right? I really expect that we're going to see that another 75 basis points hit us again, because their wild card month is September. And so they're going to leave like their chance for wiggle room in September. They already surprised us with the 50 to 75 last month, and I don't think they're going to do that again. If they do that again, it shows us how far behind they're acknowledging, right? So the true weakness in what they're where they're at, but it will also show their devout diligence to solving the recent CPI report of 9.1 that came out. It's going to show that that's actually important to them. Unlike mainstream media, who keeps saying that they're going to reverse course as soon as Q1 of 2023, which they don't really understand how this stuff works. Like, we haven't even economically seen the effects of the first 25 bip hike in March. It usually takes about 6 to 9 months for that to hit the economy. So we're not even looking at what the economic effects of that. It's just us gossiping in the market so much that we're bored of talking about it. So people are like, oh, I guess the recession's not that big a deal. Oh, I guess inflation doesn't really matter that much. Oh, I guess these hikes don't really mean that much, because they're kind of relating it to the stock price. But they're not really like conceptualizing the $6 trillion that's been pumped into the economy over the past couple of years and how big of a bubble that is. You can't just burst a big old bubble like that. So the Fed understands what is out there and what's going on. The mainstream narrative does not. There's no way that the Fed is going to reverse course. And anyways, all right, it's coming up. I have to get this like up and live. I'm sorry. I told you it was going to be a wonky ass live stream. I don't even have the website where the news comes up yet right now. All right, Fed meeting calendars, revert news, where they post the CPI, where are the meeting notes, get up the live stream, microphone check, here we go. Got that, bringing some beautiful Fed elevator music. Waiting on the live stream there. That's another 30 minutes. We'll be lucky for this live stream to make it that long, but we'll try. All right, so those for just tuning in, we were just talking about whether or not it's going to be 75 basis points or 100. Obviously, I'm thinking 75. I think 100 would be, I thought when they jumped from 50 to 75, that was a real obvious sign that they realized that they were behind the curve. So if they're, if they do that to us again, I mean, it just shows like how bad off they are. I think they're going to bring up the credibility question next. Like if they go to 100, stocks go down, up, down, up, down, up as they do liquidity sweeps to try to sweep up the derivative market from everybody betting on what's going to happen now and tomorrow when GDP print comes out. And who knows what the weeklies are going to look like on for any given stock on Friday. I know I've got some plays in the market just based on all this economic news. Nothing, just some faggot diesels, you know, nothing deep in the portfolio. I don't like gambling on earnings and all this stuff. But all right, we got 3 more minutes till it rolls right up in front of me. It was a terrible live stream. It's a terrible live stream. All I do is talk. All right. Okay. I like how this worked. Like the comment just popped up right on my screen so I could get it while I was live streaming. Super convenient. I didn't know I was going to be able to do that. Oh, the Fed really knows how to swoon you into their live stream. God, I got to turn that shit off. Let's get some beats on here, huh? You know, let's get like, let's pump the epidemic sound playlist for a minute. Decided to pay $15 a month so we could all jam out to music. Let's get what their let's see what their staff picks are. Sometimes they're really good. We'll see what it is. We'll just like kick those beats on. One time out of 10, just guys want to be mine. We just can't pretend. This love they can take time. All right. 3 times then I'm in. I heard through the grapevine. You missing a playtime, girl. Your beauty make 'em bow down. I need that body right now. Yeah. The love will never die down. Together we can fly now. Where's that page? Released February 16th. All right, we got it. Released July 6th. June, July 26, 27. All right. Where are we going to get the... Oh, we're not getting the minutes. We're getting the statement, right? Oh, where are we going to release the statement? Oh, here it is. Same place. All right, we're good. Sorry about that. Yeah, we're not getting... Did it come out already? 75? Woo! All right, that's what I expected. That's what I expected. Nice job. There it is. Oh, you're fast, man. You're fast. Yep, there it is. Okay. Recent indicators of spending and production have softened. Nonetheless, job gains have been robust in recent months, and the unemployment rate has remained low. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic, higher food and energy prices, broader price measures. Russia's war, gonna skip that. So the committee decided to raise the target rate of Fed fund to 2.14 to 2.5%, anticipating, okay, so that's what everyone expected. Okay, very good, very good, very good. Any other, all right, we're just gonna do a quick search on this document for any statements about balance sheet. All right, balance sheet. Federal Reserve was issued in May, plans for reducing that was issued in May. All right, we've got one, not much talking about there. Okay. Nothing there. All right, so it's 75 bips, pretty standard. I don't think we're going to even really have much to hear from in J Powell's meeting. I mean, when we get these kind of standard, geez, yeah, I don't think I'm going to live stream that. That's boring. Like, we got 75. Okay, it's as is. Let's see what the market's doing now. Oh, they like it. They like it. Market likes it. Now, what doesn't like it is my question. What is not responding well? I'm going to take a look at banks right now. because banks are the ones that kind of subtly kind of drag this into like a halfway point between going up or down when the market wants to react like this. I wish I could stream my 1 second chart. It's got such volatility. It's really nice. I'll have that ready at some point soon. All right. So banks are flat right now on this news. Tech is firing off. We're not seeing much in healthcare going on. Some of our squeeze plays from earlier in the week that were popping off are heavily down. Looks to me like Redbox is on a halt right now. Google up, even though their report was not so great. It's hilarious. I think people were expecting a lot worse, obviously, because advertising is so down, but it's going to get a lot worse from there. Okay, Deutsche Bank's down, JP Morgan. Let's take a look at JP Morgan. How's Walmart reacting to this news after they're coming out with the less than expected earnings? Oh, I have to talk to you guys about something, my one person about something while you're here. I noticed that oil inventories for the U.S. were way lower than estimates were negative 1.03 million barrels, and it was -4. So watch out for an extra energy crunch in the next week that we might not have expected. We've been seeing oil prices pull back on us for a little while now, allowing, I think, some liquidity in the equities and securities areas, but seeing oil inventories going down is definitely an issue on the supply and demand chain curve. So expect some oil pressures coming up. I already told you guys about natural gas last week if you guys were watching. Okay, and here we're getting a dip on SPY pretty good much. We just basically saw a rally up from about 396 on the SPY even all the way up to 397.5, and we saw a correction down about 60% correction right down to that median area around 396.7. Bank stocks still flat, NASDAQ pulling back, Apple, Microsoft are pulling back as well right now at the same time. How is Amazon doing during this? Expect them to have an issue here. Let's see what that looks like. All right, Amazon is trading right in line with Microsoft, right in line of Apple. So we're on algorithms right now controlling this. So there's liquidity sweeps, there's volatility, there's day trading going on heavily. The volume is picked up by 2 to 3 times market-wide. Market-wide volume is crazy. Oh gosh, people, this is a day trader scalper's dream right now. Dream. Just make your levels, get your levels, and play a very, very highly liquid options chain. That's a perfect scalp right now. Apple coming down, everything pulling down, really, really short term. So what I would expect we're gonna hit like on this 396. We're going to hit the lower band of our VWAP right here on the 396 on SPY, and we're probably going to bounce right on back up because that's a pretty strong, highly contested level. And we're at that point right now, so now it's breaking down past that. It's not much of a high conviction, but the volume on trades is unbelievable market-wide. Wow. All right, and we're seeing a pullback on banks right now as well. Everything in line, okay? We have things like ARKK trading in line with Bank of America, which is trading in line with Redbox, which is trading in line with Walmart, which is trading in line with Apple, which is trading in line with, what else do we have here? Oh, I'm on the wrong watch list. Sorry, let's get this. Oh my gosh, everything is just running off algorithms right now. Be careful. Hold on to your butts right now, because quite literally they're doing liquidity sweeps, and what everybody that's a retail investor thinks is going to happen, they're going to throw shorts or longs at it and make it not happen. All right, we've broken down beyond the lower band of SPY, and we're holding this level of 395.75, which is a little bit lower than the 396 level that was strong. What that is a liquidity sweep, right? Like it makes no point for them to hit a level that there's a lot of buyers or sellers at. They want to drive the price below that or above it. That's the sweep. All right, so we had the lower band of VWAP, and we know a lot of people are sitting based on volume. They've swept down below it, and now it seems we're consolidating at a very small pace. I'm watching at the 15-second chart right now. So there's a little bit more data in terms of graphing it out, but we're still talking extremely short-term scalping. And we just broke down past that level. Oh boy, sentiment is not so good. So we have about 2 hours, just under 2 hours left in the trading market right now. That gives us, okay, so this is really key. The repo market also just hit us just before this. So the liquidity is coming through. So like, I would expect this to swing for at least the next 30 to 45 minutes. But the pull downs are extreme. So let's see. Let's just watch it, right? All right, we've got 23 minutes until J-Pow speaks. And, you know, I don't know if I'm going to really live stream that. I might live stream that when I can, like, screen record it and put it in the studio, and we can all do it together, because then we can all laugh together about it. But since it's just on my laptop here, and like we can't like just like watch along together, like I'll probably hold off. I'll tell you what, this staff playlist from Epidemic Sound is doing all right. You know, next time I'll have a little bit more of something curated for us. What is everybody saying over on? I mean, I can't imagine what crazy old. I'm not gonna mention it. I tell you, I've been seeing some very, very popular YouTubers and streamers losing their mind. 5-something milli repo. Okay, that's typical. I'm expecting a rise on the repo markets. Thank you for the update. That rocks, man. I'm expecting a rise. Let's take a look at the reverse repo just to see what that is from a numbers program reporting daily. Let's go. Overnight repurchase agreements. That's not the right one. That's the slow one. That's the slow one that they show their grandparents to say, hey, look, mommy, we're doing really good. We're doing really good. Look at the numbers. But it's not really the numbers. All right, so we're at where they submitted 2.1. They got 2.1. We've got 102 participating counterparties. Wait till we hit 2.5 trill on that. That's when we're going to see a little bit of that like loosening of the mechanisms of the market structure. We've been holding fairly strong here under the control. This is starting to look like how they're controlling the gold market right now, or you know, like and how they're like, hey, we got this rev repo program, so this whole economy doesn't break. But that doesn't mean you can just like dump this in and we're giving you that free 5 basis points over whatever the Fed is. But let's see what this next hike does to the repo program, brother. All right, so what's everyone saying? Let's see what the mainstream media has got to say. We'll see what Bloomberg. We'll pull up Wall Street Journal. Fed raises rates by 75 basis points to double down on inflation. Double down on what is not even close to meeting the real negative rate of inflation. You ridiculous human beings, man. I tell you what, I wish I had some cheerleaders in my corner like Bloomberg just sitting there saying like, wow, look at Stock Doctor go, man. He's made it on the YouTube channel, man. He's doubling down on getting subscribers. These people are ridiculous, man. Okay, so Wall Street Journal. Fed raises interest rates by 75 basis points. No headline. That is the zero headline. That's the most stale headline I've ever seen in my life. Do they have anything going on in the sub-headlines? No, Wall Street Journal is wiggity whack. Let's go to our hype machines. All right, like Seeking Alpha. Let's do what hype machine headlines we got. Let's get Market Watch up there. All right, we got Seeking Alpha, Market Watch. All right, I just Popped over that one. Let's see. Fed raises interest rates for fourth time in 2022 in ongoing bid to curb hottest inflation in 4 decades. Yeah, but if you calculated it like they did 4 decades ago, what would you have? Like 20%? Like people would be really freaking out if they knew that the Fed would have to get to 20% to get to like neutral. That's how they could break it. Just a little bit of truth, they could break this whole thing. All right, that's what Market Watch says. Seeking Alpha is way better. I expect a lot of Seeking Alpha. Oh, except they got the fucking ads, you know. I'm trying to like give them a little bit of props on their being such a wonderful shill, and they can't even stop shilling just to be ready to get shilling. No, I'm not clicking on your Seeking Alpha. You don't get my email. You guys suck. Boop-a-doop-a-doo. All right, that's a questionable choice from Epidemic Sound, but we're gonna leave it playing, you know? Fuck it. 1950s rock playing out. It's cool. That was 1950s rock? Oh, we're not doing this, people.
Access granted.
Sorry, I'm having fun. Again, this is my first live stream, people. Please throw up a like over there. I'm having a good old time. All right, 17 minutes left until we get into the Federal Reserve. Thanks for bringing up that reverse repo program. That was dope to look at. I wish I had thought of that. And what else do we got? No, guys, I think that's it. The rest is just following the Fed speak and the narrative, you know. We got a lot more content coming up. Thanks for the people that did enjoy tuning in with me. Like, we got it, man. We're moving. So watch out for September. Watch out for balance sheet cutoff dates, like 15th and 30th. And thanks a lot for the time, dudes. All right, everybody. Have a beautiful day. Keep block rocking, no show stopping. Don't worry about how this Fed be clocking. We'll be all right. All right, man. And watch me like try to figure out how to like shut this shit off like an old man. Never done a live stream once in his life, man. I'll probably start like switch it off shit. All right, man. Start changing filters, man. All right. Peace, people.